Welcome to this weekly macro update. Today, I will focus on three topics: the last ECB meeting, the global manufacturing cycle, and finally, the Chinese recovery. Regarding monetary policy, my first point, the ECB stayed on hold last week, and the policy message was not so dovish. First, it revised up its inflation projection for next year, both for headline and core CPI. Second, the Governing Council seems not overly concerned about the strength of the euro and its possible disinflationary impact. Finally, the ECB has not given any indications concerning a possible revision of its pandemic emergency purchase program. We think that these elements are positive for the euro, and we continue to see a further weakening of the dollar against the euro as the most likely scenario. Through the end of the year, the ECB is likely to extend the duration and increase the size of its program as inflation will remain low. Turning to my second point on global manufacturing activity, the recovery is still in place and should continue through the end of the year, also at a lower pace. In July, industrial production in the Eurozone was up by 4%, and in the US, manufacturing confidence indicators continued to substantially improve. In China, the recovery of the manufacturing cycle is more advanced, and activity strengthened further in August. Indeed, the industrial production growth rate is now at pre-crisis levels. That leads me to my third point. In China, economic activity has continued to rebound in the third quarter, and it is now expanding into additional sectors. The recovery was previously driven by infrastructure and property investments, thanks to easing financing conditions. The recovery also benefited from the improvement in global demand that supports Chinese exports. Now the recovery is broadening to manufacturing investment and to domestic consumptions. Firms are beginning to expand their workforce, and retail sales growth recovered after a broad-based increase during the months. This week, the highlight would be the next FOMC meeting. The Fed is unlikely to change policy rates, but it will give more details on its new average inflation targeting framework, as well as its updated economic projections. Thank you for your attention, have a good week, and see you next Wednesday.